Hello and welcome to this webinar. I'm Swati Raina. Today we are going to discuss about 12-20-80 strategy of asset allocation, where we are going to talk about what and how to make an Atmanirbhar portfolio. And most importantly, we are going to discuss about asset allocation strategy. So it's going to be one interesting session today, and we are joined by a very special guest today. Let me introduce him. Chirag Mehta. He is CIO Quantum AMC. Chirag, welcome to this webinar. चिराग का मैं आपको एक इंट्रो दे दूं. He has a very broad, I must say, body of work behind him. More than 19 years of experience in the financial markets. He specializes in the field of alternative investment strategies, and he's also a qualified CAIA, that is Chartered Alternative Investment Analyst. Also, he completed his master's in management studies, MBA in finance. And currently, he manages 4 funds largely in the field of alternative investments. That includes gold fund, a multi-asset fund, and an equity fund of funds. So, Chirag, welcome again to this webinar, and I'm sure this is going to be one interesting session with you.
Thank you, Swati. Good to be here.
बहुत ही स्पेशल होने वाला है ये डिस्कशन बिकॉज वी आर टॉकिंग अबाउट एन आत्मनिर्भर पोर्टफोलियो एंड वी ऑल नो आत्मनिर्भर आई थिंक इज वर्ड ऑफ द ईयर फॉर ऑल ऑफ अस, जिसमें हम कोशिश कर रहे हैं आत्मनिर्भर बनने की, किसी पर कोई डिपेंडेंसी ना रहे. वैसा ही चाहता है हर कोई कि उसका पोर्टफोलियो भी सेल्फ डिपेंडेंट रहे, इंडिपेंडेंट सो टू से. अब यहाँ पर सबसे पहले जब हम एक आत्मनिर्भर पोर्टफोलियो की बात करते हैं, इम्पोर्टेंट सबसे पहले जानना ये हो जाता है चिराग कि हम यहाँ पर एसेट एलोकेशन को क्यों इम्पोर्टेंट मान रहे हैं. बिकॉज द काइंड ऑफ मार्केट वी सी एट द मोमेंट, या जिस भी दौर से बाजार गुजरता है, निवेशकों को समझना और जानना जरूरी है कि उनके पोर्टफोलियो पर इस बाजार का कैसा असर पड़ रहा है. सो जस्ट टू स्टार्ट विद, एसेट एलोकेशन क्यों जरूरी है हमारे पोर्टफोलियो के लिए.
स्वाति, थैंक यू फॉर हैविंग मी. अगर देखें तो आत्मनिर्भर हमने बात किया और एसेट एलोकेशन की बात की, ये बहुत रिलेटेड है. देयर आर मेनी स्टडीज दैट हैव सेड दैट most of the variability of returns and risk in a portfolio comes from asset allocation. तो आपका जो आउटकम है आपके पोर्टफोलियो के, कि कितने रिटर्न्स बनाएगा या कितने रिस्क होगा वो पोर्टफोलियो में, वो एसेट एलोकेशन ही डिटरमाइन करता है. सो अगर आपको एसेट एलोकेशन रॉन्ग हो गया, then you have a big issue in terms of the risk you take or the returns you generate. And therefore, asset allocation is very, very important. There are many studies that said 90% of the variability in returns emanates from asset allocation. So अगर asset allocation, if you get it right, तो आपके जो भी goals आपने set किए हैं, without much worrying about it, with having a peaceful sleep at night, आप वो सारे goals complete कर सकते हैं आपके portfolio के through. और जो भी वेरिएशन है या जर्नी है आपकी इन्वेस्टमेंट्स की, वो आपको जिस हिसाब से चाहिए उस हिसाब से आप केटर कर सकते हैं. सो दैट इज द premise of asset allocation. Helps you fulfill the returns that you need, the risk that you will take, and reach your goals at the end of the day. For example, एक छोटा सा एग्जाम्पल है जैसे एक्विटीज में अगर आप अच्छे रिटर्न्स तो देता ही है और लॉन्ग टर्म, मगर उसमें वॉलेटिलिटी बहुत ज़्यादा है. तो अगर आप वो वॉलेटिलिटी टॉलरेट नहीं कर सकते हैं कि कभी भी आपके पोर्टफोलियो 30, 40, 50% गिर सकते हैं अगर आप सिर्फ एक्विटी पोर्टफोलियो बनाते हैं, और अगर आप उसके अंदर मिक्स डालते हैं दूसरे एसेट्स का, जिसे हम एसेट एलोकेशन बोलते हैं, तो आपको काफ़ी अच्छा जर्नी होगा. एट द सेम टाइम आप अपने रिटर्न्स भी अचीव करेंगे जो आपको चाहिए. यू कैन अचीव अ स्लाइटली हायर रिटर्न एज वेल. There are many methods of asset allocation and tools like rebalancing जो आपको हेल्प करता है अचीव करने के लिए जो रिटर्न्स आपको चाहिए और जो रिस्क what you're wanting to take.
Definitely we'll come to that, Chirag. रिस्क क्या एसोसिएटेड है, एसेट एलोकेशन अगर बिगड़ जाए तो आप उसको कैसे जो डिरेल हुआ आपका पोर्टफोलियो कैसे वापस पटरी पर ला सकते हैं, उस पर हम डेफिनेटली चर्चा आपसे करेंगे. पर वन स्टेप अहेड अगर हम समझें आपसे चिराग कि कौन से ऐसे फैक्टर्स हैं जिसको ध्यान में रखते हुए किसी को एसेट एलोकेशन करना चाहिए. बिकॉज सी हम एसेट एलोकेशन की बात तो करते हैं कि हाँ आपको हर एक एसेट क्लास में एक अच्छा पोर्टफोलियो बनाना चाहिए, उसमें डाइवर्सिफाई करें सो दैट मार्केट कभी ऊपर जाए नीचे जाए वो एसेट क्लास अपने अपने हिसाब से बिहेव करते हैं, रिएक्ट करते हैं. सो अ गुड एसेट एलोकेशन डेफिनेटली cushions any risk in the market. But वो फैक्टर्स कौन से हैं? शायद ये भी जानना बेहद ज़रूरी है जिससे कि एक निवेशक अपने लिए एक अच्छी एसेट एलोकेशन स्ट्रैटेजी सेट कर सकता है.
So there are few things that will determine from a risk perspective कि आपको क्या consider करने चाहिए factors. So overall first is क्या goals, what are your goals? So आपके goals near term है, long term है, so that will tell you आप कितने aggressive हो सकते हैं आपके portfolio के साथ, कि कितना conservative रहना है आपको. So आपके क्या goals है, उनका क्या time horizon है. So अगर goals long term है, then you have more time and you can be a little more aggressive. And if you have lesser time to fulfill your goals, then probably you need to be a little conservative because short term mein, which assets are going to work well is very difficult to determine. Over the long run, you know the characteristics, the risk return profile of a portfolio or an asset within your portfolio. एंड थर्ड इज आपका रिस्क टॉलरेंस क्या है. अगर आप ऐसे एसेट में इन्वेस्टेड है जो आपको समझ नहीं आता है और वो नीचे गिर जाता है, देन यू पैनिक एंड यू टेक द बैड कॉल्स. So overall, you need to have three things. One is what goals you are saving for, or what are your financial goals that you want to meet. Second is the time horizon that you have, and third is the risk tolerance that you need to keep under consideration. So all these four will determine. For example, if you want that, you have X percentage return requirement for your financial goal, and if you take less risk within your portfolio, you will not achieve. Risk to kam hoga portfolio ka, but you will not achieve the returns that you're wanting for. And therefore, striking a balance, having the right approach, right assets, right mix in the portfolio is very, very important. So all these things, all these factors will help you determine what kind of asset allocation that you need to take, and a careful introspection of all of these elements will determine the asset allocation approach that you should have.
Okay, you spoke about striking the right chord or striking the right balance, Chirag. So, how do I ensure that my asset mix has potential to help me reach my goals? There must be few parameters for that, right? तो वो एसेट मिक्स का जो एक सही तरीका या हम उसको कह सकते हैं, इज इट अ फॉर्मूला और इज इट अ स्ट्रैटेजी दैट वन हैज टू कीप इन माइंड?
Yeah, so formula is very, very simple, right? We call it, when we meet investors, they ask us, what is the magic formula? What is the formula that I need to have that will help me reach my long term goals easily? So we call it 12-80-20. Colloquially, we call it 12-20-80. And that is the formula that really helps you tide over ups and downs of markets very, very easily. What does it mean is 12 is 12 months of your expenses parked very, very safe. Whatever thing you think is safe, you need to be there, uh, which could be your liquid funds, or it could be your fixed deposits, whatever you think is safest. Even in liquid funds, there are various types of liquid funds. You need to be very, very careful by choosing your liquid fund because this has to be safe, that does not take any credit risk, etc. Rest of money that you have can be divided into 20-80, 20 into gold and 80 into equities. 80 into equities. Why? Equities should be core. An asset that helps you tide over inflation over long periods of time is the asset where you need to be. Otherwise, what you will save will be eaten up by inflation because your goals, whatever amount you want to save for your goals, will also have inflation attached to it, be it medical expenses, be it education, be it foreign holiday. Everything has inflation with it. So you need to have the core asset that helps you beat that inflation. And therefore, core is going to be equity. So 80% has to be into equity markets and 20% which helps you diversify. Because we've seen that gold is the most effective diversifier today. Whenever equities have not done well, gold has done well. And therefore, it's like two engines that you're working on. One is the core engine, which is equities, and one is a diversification or risk mitigation engine. When the first engine is not working, it helps you tide over during that time. It's the second engine of gold. So overall, save money. Then you have core allocation to equities and a diversification element in form of gold. So that is, I think, a magic formula. One can tweak it based on their requirements. Say 12 months is not enough. My cash flows are uncertain. I can be 24 months, 36 months. But the core thing, the concept is some safe money that helps you tide over bad times, core into equities which help you beat inflation over the long run and generate good wealth for you, and a
Hmm.
risk mitigation engine that helps you tide over bad times again, which is gold.
Hmm. Having said that, Chirag, you said gold. Definitely, it's very important to touch that, shine, to have that shine in your portfolio. Gold is very important. So, is that the reason that 60-40 ka jo equity debt portfolio hai, has its own limitations? Because what we have traditionally known till time that, 60-40 traditionally has been a workable formula for a lot many of us. But now you have introduced this concept. You've just explained to us 12, 20, and 80. That's a magical formula of asset allocation. So, is this why a 60-40 has a limitation? Because there's no gold here, and it's more of an equity or to debt portfolio asset mix?
So again, their debt is brings in stability with itself, but at the same time, if you we need not go very long. If you look at 2022 as a year, where equities and bonds both fell at the same time, so where was your diversification, right?
Hmm.
So many times the downside moves can be caused by the same set of factors in equity and debt both, and therefore it's not an effective diversification that we saw in equity and debt as a mix, in a 60-40 mix. So it is something like a two-legged stool. A two-legged stool will be imbalanced. You could easily trip off if there are just two things. If they are three-legged stool, it will be more stable. So if you have a mix of equity, debt, and gold, and we have seen that gold is a better diversification to the equity risk, the bulk that you're investing into, it is a better diversification tool than debt, because as we have seen this year, debt and equity fell together during the first half of this year, and gold was performing well. Gold was a positive performing asset class during that time. So it has, we have seen time and again that equity and debt can need not protect your portfolio when it really counts, whereas gold is that element that protects your portfolio when it really counts. And it is not now. If you look at numbers since 1980s, years when equity markets have not done well, gold has done well usually. So it tells you that it is a very negatively correlated asset. It does well when it really counts, and therefore you need to move away from the traditional 60-40 portfolio to include a mix that has gold within it. So
Hmm.
you need not go overboard with your gold allocation, the shine in your portfolio, but you need to have some allocation to gold in your portfolio at all times.
Absolutely. So, is there any tool or a calculator, Chirag, that you would recommend for creating a weatherproof portfolio? Kyunki definitely for a investor who is a comparatively new investor, उसके लिए उसको कैसे समझ में आए कि how do I go for this right asset mix, which is called a 12, 20, and 80 asset allocation formula?
Yeah, sure. There is a very simple calculator on our website which makes investor journey very, very simple. You just go log on to quantumamc.com, and there is a calculator in front of you which helps you tweak based on what you need. So some may say that 12 months is not enough. I can increase it to 24, 36 months, and then I can split the asset within the buckets of 20 and 80. And within the 2080 also, for example, in the 80, you need to have various different styles of investing in equity markets, because each style in equity market has its own sub cycles within the equity market cycle. So you need to diversify across different allocations of equities. And that is where this calculator, which not only allows you to spread between 12, 20, 80, it also helps you diversify across different types of equity allocations. So there is a very simple tool that we have created to make life simple for investors. And we know that it's not a one-time activity. It's a perpetual, because people keep investing their surplus savings into equity markets or into investments. And therefore, they can each time log on to a website, see where they are and where they need to go, and they can craft their portfolio over a period of time. So it's very simple tool. It's no rocket science. If anyone tells you investing is difficult, please don't buy that argument. It's very simple. And once you log onto a website, you can easily see that it's so simple to do so. The 12, 20, 80,
Absolutely.
and make your
Yeah, that's the
portfolio
beauty.
real Atmanirbhar.
Yes, that's the beauty of technology and platforms like yours that makes life simpler for the investors. But Chirag, tell me one thing: the kind of market we are in at the moment. So we see euphoric time one day, and there is definitely a bit of volatility too. But yeah, some uncertainty, some really good highs we see. तो ये जो 12-20-80 की एसेट एलोकेशन स्ट्रेटजी है, हाउ डू यू सी it benefiting investors at this point in time when I actually speak of current markets?
No, absolutely. So if you look at the 80%, some may see that markets are at all-time high. Should I allocate 80 to equities at this point in time? But they are looking at just where the equity markets are today, not where they're going to go in the future. So if you look at the domestic consumption story in India, is very robust. We do. If you look at the period from 2017 till 2020 before COVID, things were not really moving on the ground. Earnings growth was flat. When you talk to companies, things were not moving on the ground. As contrary to now, when we talk to companies, there is robustness, there is demand, there is consumption happening in the economy. People say that there is a global recession coming, but if you look at what's happening in India, India is very dealing from the global world. Our exports are just close to 21% of our GDP, whereas the internal consumption is still very large portion of our economy, which is going on very well. So we are very hopeful on equity markets over next couple of years, which is where we have visibility, and therefore still at this point in juncture, 80% high allocation is still suitable and will generate good portfolio returns for investors. Whereas things could go wrong. We never predicted COVID come and it came out of nowhere. There have been shocks or dislocations in the global world, which could also impact India to some extent. And therefore, you need to have an allocation like gold. So even in the current context, the 12, 20, 80 suits really well from current market perspective, because the bulk still needs to be equity, which is looking still reasonably good over next 2 years. And if there are risks that will emanate, the 12 and 20 will help you tide during those tough periods. So we have seen, be it global financial crisis, be it the 2013 taper tantrum, be it the COVID crisis, this formula 12, 20, 80 has really worked well for investors. And we hope not only over next couple of years, over the long run, it should work well for investors too.
So does it, Chirag, does it work well for all the types of investors? Because an 80% allocation in equity, 20% is fine. Okay, fine, is giving you hedge against any risk you have. But 80%, if you're talking about equity, what about conservative investors? Does it suit them as well, and how?
Sure. We do understand that conservative investors, 80 may be slightly higher allocation to them from an equity market perspective. What they simply need to do to try to be conservative, they can increase the 12 to 36, 48, whatever they think, because they are dependent to some extent on their investments for their monthly cash flows. So they need to set aside a higher sum, and then whatever is for very long term needs, which needs to be for long term goals like passing on to next generation, or very long term contingencies, etc., which they want to grow, that portion can be 80-20. So by doing that, by increasing the 12, you are minimizing your risk, lessening your exposure to equity markets, and post that 80-20 mix works really well. So it could be crafted to each one's requirement. That's the beauty of the formula that we have. You can tweak your weights and therefore arrive at conservative or aggressive allocation that you want to.
Hmm.
12 months,
So,
we say it's a minimum.
so in the 12-20-80 magical asset allocation formula you just explained to all of us, the 80% basket, if we talk about, what does it all consist of? The equity basket which is there, How does an investor go about the equity portion of this?
Yeah, so a good asset allocation need not be just diversified across asset classes, but within asset classes also it should have a very good diversification. At least when the bulk of your portfolio is equity, so within that equity basket, it should be very well diversified. So what we tell investors or what we recommend is out of that 80, 70% of that has to be in a broad bouquet of equity funds which are active in nature. So you could have quantum equity fund of funds is what we recommend, which is a mix of 9 equity funds spread across different styles, spread across different market caps, and therefore giving that diversification there. In this 9 funds, you don't have any fund which is a value style, and therefore the quantum equity long-term equity value fund is what we recommend to have a value advantage. So if you look at this year, growth funds have not done well, but value fund has stood out in this rally. So they were not doing well between 2017 and 20, which was a largely growth market, and growth funds were doing well, whereas value was not doing well. But this year, again, value has overtaken growth in a big way. So overall, you need to have value as an allocation within your portfolio because it has its own cycles. And then you have to have a flavor of sustainability within your portfolio because sustainable companies, we have seen time and again, these are quality companies that deliver well over the long run. So overall, you need to have different types of funds within your allocation. One is the quantum equity fund of fund, a broad basket of 9 equity funds, a value style strategy, which is the quantum long-term equity value fund, and a sustainable fund, which helps you get quality companies in your portfolio, which we have seen time and again compound well over the long run. So the Quantum India ESG Equity Fund is what we recommend. So it's a good mix, which is spread across styles, spread across market caps, spread across types of funds, and therefore makes a good diversification tool within your for your equity component. So we do understand the need for investors to diversify to different styles, and therefore we offer this good mix that we recommend that investors should allocate to.
And how does rebalancing, because in the beginning you mentioned a rebalance of the portfolio, which is very important. And when the equity valuation goes up and down, the investors need to see that the allocation. So does it matter here as well? And what is the rebalancing strategy over here?
Sure. So rebalancing is nothing just but optimizing your portfolio, right? What you're trying to do is something that has gone up significantly large. You bring it back to the original weights that you intended to. So you're booking profits there and allocating it to something that has not worked because every asset will go through a cycle of its own. And therefore, and given these are non-correlated assets, it will help you to do that buy high and sell high and buy low kind of philosophy that you want to enact for your portfolio. So overall, what we have seen is when you rebalance is there are certain times set for each and every asset class or within the asset class as well. There are set bands that you should work with. So if your 80, say for example, goes to 90, you bring it back to 80 and allocate to other asset classes which have not gone up so much. Therefore, you kind of maintain that semblance, maintain that risk return profile of your portfolio, but at the same time capture the upsides. And it shouldn't be very soon because what will happen is if you don't allow for the full cycle to play itself, you will be booking in too early. So you need to take care of that also. So when you're doing that, you need to have set bands. So we will tell investors the right timing when they should rebalance, but optimally it should be somewhere between 25% for equity markets as a ballpark number. When equity markets go up by 25-30%, that is when you should rebalance the portfolio. This is not just saying the number in the air, but we have done historical back testing of what will be the optimal levels when one should rebalance. But rebalancing, I agree with your point. It's very, very critical for a portfolio to generate and optimize the return and reduce the risk. Because when equity markets are going through a bull run, it makes all the sense to kind of block gains there or book your profits and move into asset class that does not work well. So when the tide turns, you again benefit out of that full cycle play that you can get through rebalancing. So, you should always look at your portfolio, see how much they have gone up, and whether it's the right time. Don't get carried away by bull runs. You'll always see optimism in the air when there is a bull market in any asset classes. Don't get carried away. Be disciplined, be systematic, and rebalance your portfolio those times.
Absolutely, Chirag. So, one more thing I wanted to know, that not only in terms of risk, but we have wide range of investors in terms of age also. So we have investors who start investing as soon as in 20s, because people are getting like really samajhdar, we say jagruk investor, they are they are becoming, and they know the importance of investing. And then we have in 30s and 40s, even in 50s, they want to build a portfolio. So specifically, if I have to ask you that for an investor who is in his 50s and approaching retirement, so because there is a wide range of investors who keep on asking questions about exposure in equity even when they are touching their 60s. So do you think this kind of strategy of 12, 20, 80 would actually suit a investor who is approaching his or her retirement, or say in 50s or 55?
So it depends on what they want their corpus for. If it is for their daily livelihoods to meet the monthly expenses, then probably it may be slightly more aggressive. Then they need to delineate what is for my consumption and what is for the long-term wealth generation that I want to. So in the conservative portfolio, like if they are wanting to live on those that sum for their monthly expenses, then they can't risk that money. But whatever is for the long term needs is easily transportable to the 12, 20, 80 formula, and they can benefit from the long term wealth creation that it brings with them. So it will depend, I think, what their needs are and what their purpose is, and therefore they can then demarcate the money accordingly and then invest accordingly. So I think that will be the way I will say one should approach those kind of
Okay.
stages of life.
Okay. So because since we are talking about an Atmanirbhar portfolio, so how does an AMC like yours, because we're talking about this 12, 20, 80 asset allocation strategy, how can an investor reap the benefits of this asset allocation formula uh, through you? Because lot of investors जो कि नए investor होते हैं, they don't know the asset allocation के जो nuances होते हैं. But does the advisor help? वो जो छोटी छोटी उनको एडवाइजेस चाहिए, या कैसे उनको अपने जो एसेट क्लास को बैलेंस करना है, या इक्विटी कितना होना है, कैसा होना चाहिए, तो ये अलग अलग स्टेप में हेल्प उनकी आप कैसे करते हैं?
So हम first educate करते हैं the importance of asset allocation, show them the hard numbers that let the numbers speak for themselves. That जब भी आप तीन asset class में asset allocate करते हैं, for example in equities the biggest drawdown that we saw from 2004 till now was 56% in 2008. अगर आपके तीनों asset class होते हैं आपके portfolio में, so your drawdown would have been closer to 20%. So those are hard numbers, hard hitting, telling investors that this really works. And at those drawdown levels of equities, if you rebalance, then your returns are significantly large and much more even than what equities could give you. So we show them the hard numbers, teach them what asset allocation means, and give them the right tools that they need for doing it simpler way. Like for example, the tools that we built on our website. Most of the funds that we have built so far or offered to investors or launched are just building blocks to this asset allocation. We always wanted to investors to approach their investments through asset allocation and give them the right tools and knowledge so that they could build their portfolio in such manner. So we do a lot of education, we do a lot of articles, we do a lot of thought leadership, we do very simplified things which are very, very complex to be felt because we have seen the external environment, such kind of things are very, very complex that appear to investors, but in fact they are very, very simple. So we did demystify, make it simple, and let investors learn So initially, when we speak to investors, they might be very inclined towards trading in equity markets, but learn it the hard way and realize what we have said and become a thoughtful investor and come to us. So that is the journey that we have seen usually for investors. We hopefully see more thoughtful investors that will come and align with our thought process and use the tools that we have laid out for them to make the journey simple, and therefore enjoy the fruits of the Atmanirbhar portfolio, which is 12-20-80.
Absolutely, because as I said earlier, investors are getting really aware now. कोशिश हमेशा जारी रहती है कि हम कुछ फाइनेंशियल एजुकेशन की तरफ कुछ करें, इनिशिएटिव करें, and hence this webinar also, in which we are actually talking about something like Atmanirbhar Portfolio. But I'm quite keen to know something from you, Chirag, that how do you see, how has an investor evolved in the past 2.5, 3 years? Because we had seen COVID times and then people getting like really, jitters when the market was down. But now we know that, with the number of demat accounts being opened and the SIP, record SIP numbers, we know for sure that yes, they know the they know the game, they are in it. So what kind of investors are actually coming into the industry? I just wanted to know this insight from you, because that actually connects to the Atmanirbhar portfolio, and those will be the kind of investor who will be interested in these kind of strategies like 12-20-80.
No, Swati, what you said is really apt. The journey that investors have seen over last 3 years has made them more mature, more understanding in terms of what markets are and what markets should be. So we are getting a lot of investors which are getting more thoughtful, more decisive in their approach to investments. And initially, a lot of demat accounts opened from a trading mentality perspective, but now they are moving, fast shifting. Even the volatility that we see in equity markets, especially this year, has taught them that this is not enough, or there could be pain points with such kind of approaches, and therefore they are fast moving and learning, moving fast the learning curve, and trying to ensure that they are allocated to different allocations of asset markets, and therefore we see that journey really unfold very fast. And as you rightly said, that there is too much information, some of which is noise, but there is a lot of information going out to investors, which is making them more learned. I can see the efforts that you all take, the efforts that we take to make them more learned is kind of working very well. So I think we are getting into a zone where we will have more thoughtful investors, and who are kind of not looking at just trading but real building wealth over the long run, and they are coming into the fold. So the journey starts initially not with the right manner, but they learn it the hard way and then move on to what is really the asset allocation, and that helps them tide over the tough times and the good times.
Absolutely. And I think this will be one of the last questions I'll be asking you. On someone who is ready to enter the market now, as in someone who wants to invest now. And as I earlier said, people, really young people are actually entering the market, because when we also do our shows, we get a lot of questions from investors who are in their early 20s. And they said, हम तो पिछले 5-6 1-2 साल से invest कर रहे थे. I was surprised to see that there was a question from one of the viewers. She said, she's 22 years old and she's been investing from past 3-4 years. So that is wonderful, actually. So, what kind of advice or a tip or anything you would call it, you would like to give the new investors who have just entered at this point, where they have seen one cycle of ups and down, market volatility, and then of course they have seen the COVID time also, which is one of the biggest events of our times. What one advice you would like to give them for their financial journey?
Sure. I know that many investors have come or adopted investing at a very early stage, and that group is growing very large and very fast. So overall, I think that don't get swayed away by market swings. They are part and parcel of what markets are. So you will see that unfold every now and then. Use it to your advantage, rebalance your portfolio, have an approach of asset allocation within your investment. I think that will help you create real long term wealth for you, and that is the mantra actually. So don't get into just the attractiveness of equity markets. There are markets that will help you balance the risk there, and therefore allocate across. And your goal has to be beating inflation minimum. And I will say that don't go for a six every ball play. It's a long test match. Play it through your advantage and asset allocate and generate the fruits that you'll enjoy over the long run. So I think please allocate across asset classes. Don't get just into one asset class. That could be just a starting point, and then you need to move and see that. And please adopt 12, 20, 80. If you're an early age, nothing like it to adopt 12, 20, 80, and you will see that your investments will bear fruits, and that could be very useful for you over the long run.
Absolutely. And that is indeed a route to an Atmanirbhar portfolio, which we discussed in this webinar. Thank you so much, Chirag, for joining us for this webinar where we discussed about 12, 20, 80 strategy of asset allocation. That is route to an Atmanirbhar portfolio. We tried to discuss what is this strategy और कैसे इन्वेस्टर्स को हेल्प कर सकती है अपना आत्मनिर्भर पोर्टफोलियो बनाने के लिए और we try to educate our viewers through our different platforms, which we try to do today as well. So I'll thank you again, Chirag, for joining us. और हमें भी दीजिए फिलहाल इजाजत. For all who have just joined us for the webinar, thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.